Anyways, before I get started, maybe I can talk a little bit about our company. Be brief here, but our company, Advisors Resource Company, founded by a former chief actuary, and he actually ran a regional office for a major insurance company, and he really just recognized the challenges that advisors face when writing life insurance, and really they're expected to do everything, generate proposals, do case design, um, take paperwork, handle service. And typically, if an advisor is successful, they're just not going to have the time to do that. And this is really one of the underlying reasons our firm was born, is to help advisors in those areas so that they're able to serve their clients better. Uh, our company's core values is growth oriented, get it done attitude, open and honest, adaptable to change, and respect. So out of that, our company's process, we call the Premier Producer process, was born. You can see it on the screen. And really, it consists of 6 things. We have competitive products, top compensation, tailored yet simple presentations, which you're going to see today. We do case design and consultation. We have a process where we take applications for you, underwriting support, and finally, we help manage in-force policies. But on to the main event, which you guys are really here to see, and that is our Premier Bonus Plan. This is a tax advantage strategy for business owners to help them save more for retirement. This is fantastic for anyone who is maybe looking at a qualified plan, or is looking at doing a SEP IRA, or maybe can't do a SEP IRA because they have too many employees now. And so really it's that is what this is for. So I'm going to go over the plan. Feel free to ask questions while I'm going through it. But first, again, who is the target market? General rules for overfunded life insurance apply, in that you want to look for somebody who's, under the age of 60. For me, I would say I wouldn't do this for somebody who wants to put in less than 10,000 a year. For you, that number might be different. But I say 10,000 because that'll yield a target premium of about, I'd say 5,000. And, that's enough to make it worth it for me. So, for you, you have to think about it, because you are going to be tied to servicing this plan if you're going to do the right thing for a long period of time. In addition to that, income about 150 to 500,000. Once you're making over 500,000, we typically start looking at some different plans that might be more tax advantaged. But bottom line is, the target is a business owner who wants to save more for their own retirement. Typically, they have a qualified plan, or they're thinking about doing one. Sometimes this could work for somebody who's considering it, or adding some type of plan that so that they can save more. Business owners who have a SEP IRA but now have employees are also a good target. And really, this is mostly done for the business owner, not an employee or anything like that. So what is the Premier Bonus Plan? Well, first off, we're going to utilize an IUL. So we're utilizing cash value insurance. It's a strategy to help them save more for retirement. It's tax advantage in that it grows tax deferred, and we can take it out tax free. Now, there is a deduction to the business, but the business owner or the participant has to pick up the contribution on their taxes, but we have a way to mitigate that. This isn't subject to deferred compensation rules or anything like that, 409A, 409A, that type of thing. The contributions are flexible generally, and the biggest benefit is a typical benefit of why you buy cash value insurance to begin with, and that's the growth on the policy isn't taxable, and then when you take it out, it's tax-free. So how do we make this tax advantage, or what is the tax advantage part of this? That's really this next slide. And so This is quite the flow chart, I must say myself. But here's where the rubber really meets the road. So the company, business owner, whatever, takes the money. Let's say, I'm going to use an extreme example. Let's say it's 100,000. So the company puts in $100,000. A year from now, if I put in 100,000, I'm going to owe taxes on it because I didn't withhold taxes from this and so forth. So I take the 100 grand, I put it in the policy. Now, a year from now, I owe 35,000 in taxes. So rather than pay those taxes out of my pocket, I'm going to take a loan from the policy and pay the government with that. So why you might do that is because, number one, on an index policy, every dollar I loan out, they're going to charge me around 5%. So that's 5 cents on the dollar, and my money is still earning whatever the index does. So if the index does, let's say 7%, I've earned 2 cents off the money because of the difference between the loan rate and the gross rate of return. I've earned 2 cents off the money that I gave to the government to pay my taxes. This is materially better than just putting in the net after-tax amount of 65,000 on that 100,000. So hopefully that makes sense to everybody. But I do that every year, year in and year out, and then later on, I'm going to take income out of this policy for retirement benefits. So hopefully that makes sense to everybody. If you have any questions, feel free to sort of chime in. Before I go any further, if you see on here on the left-hand side of your screen, you have our cover page for this presentation. So our firm will actually brand our presentations to your firm. So, whatever your color scheme is, whatever your logo is, we incorporate that into our material so that whatever you've put together, or I'm sorry, whatever we've put together on your behalf when you present it to your client, it looks like you spent a lot of time creating it. So I think that's something to keep in mind. That's important. So we've got the cover page, and by the way, this stock photo guide that can change to match the demographics of your client. So age, race, gender, that type of thing, we can change it. So this presentation goes through, and the first couple slides are just educational pieces that you can walk through with your client. So the first one on the left side is just simply talking about, well, how are you going to retire? What are you saving for retirement in, which is typically retirement accounts. A lot of business owners do a lot of retirement accounts. So that's what we're looking at there. The right-hand side of the screen is a conversation around what tax rates are today. So I'll usually point to, the far right side of that and say, look, tax rates are right here right now. About 37% is the highest tax bracket. Look at how high they've been in the past. They've been as high as, 90% in the past. And I'll actually point to it like this. So I'll just say, look, it's been as high as this. And then the obvious question from there is, well, where do you think taxes are going to be in the future? And most people, if they're being genuine, would agree that they're going to be higher in the future. So this left-hand side, again, just kind of going over the benefits of the plan. No administration fees, no IRS forms. It's not subject to deferred compensation rules, flexible contribution amounts. We could be selective in participation. And then for the participant, personalized ownership, choice of when we take income, tax-free income later on. And I think the most important thing is this is going to cash flow like a deduction. And so that's really what this on the right-hand side is demonstrating, that I sort of alluded to in the beginning. Business puts the money into the policy. The business owner owns that policy, or the participant owns that policy. From the insurance cash values, we take a loan. So this example was 50,000 with taxes due of 15,000. So we take a loan out of the policy for 15,000 so that the net out of pocket goes down to zero when it comes to the taxes. And then later on, you can take out income for your family and so forth. Let's change the page here. There we go. So this is the Premier Bonus Plan on the left-hand side of this page on the left, and then the right-hand side is a comparison qualified plan. So I'll start with the Premier Bonus Plan. You'll see you're putting 50,000 in the first year, and then there's that tax reimbursements in the second year. So you can see how I've offset those, the timing of that, so that you can pull those loans out for the purpose of paying the taxes. And then that continues every year until year 11. And then later on, we're taking out 88,000 of income. When you compare that to the after-tax income from the qualified plan, and the qualified plan is less than half. And, you know, we are assuming that there's an admin fee on the qualified plan, and we are assuming that they couldn't get 100% of the contribution in their account specifically. So what I mean by that is, if I'm going to do a profit share, for example, I could put 50,000 in the profit share, but maybe 5,000 or 10% of that needs to go to my employees. So that's kind of what that is. And again, we could make it 100% to the owner and zero out this admin cost, and the insurance will still blow it out of the water. Let's see. Oh, there we go. Sorry, I couldn't advance. So then this next page, you know, I like numbers, so you might do this bar graph first before the numbers, but I don't know that it really matters. This next page is just simply the after-tax income at age 66 to 100. So the first one is the executive or the Premier Bonus Plan. The next one is a qualified plan with a 37% tax bracket. And then the next one after that is a qualified plan at a 47% tax bracket. And then finally, I'm matching the insurance here and assuming a 9.8% rate of return. So basically, stated differently, your qualified plan has to earn 9.8% to match the Premier Bonus Plan. So then over here on the right-hand side, we have just a more full insurance ledger where they've got the premiums going in here. We've got the cash value and the death benefit, and then we have the loans coming out to pay the taxes. And that just continues on to the next page. Oops, I advanced it too far. And then that's the qualified plan. So I'm going to slide back a few slides. So this is a great plan for a business owner that wants a deduction, but a SEP isn't appropriate for them, or it's going to be too costly, or you just want to show them something different. I mean, I think this is a fantastic option for anybody who's considering the expense of setting up a qualified plan, because we can save those additional costs and save more for their own retirement. Plus, they'll have the life insurance death benefit for their family and so forth. One thing we've also done this for is people who get big bonuses at the end of the year. You know, they'll come to you and they'll say, what can I do to save on taxes? I get this big bonus at the end of the year and it's killing me. Well, you could put it in this policy. Let's say it's $50,000 bonus. And then later on, we loan out the money to pay the taxes. You get the same leveraging effect and the same buildup as this. I would just show it a little bit differently and talk about it a little bit differently. But the Premier Bonus Plan can work for both of those types of people. It's really a slick plan and it works really well for them. Feel free to ask any questions while I'm wrapping up, but just the last thing I was going to bring up here, you know, our firm would be happy to work with you on any of these types of cases and more. But in order to engage with us, we get your appointment paperwork submitted. You fill out a quick start. We analyze your typical market. From there, we get you appointed, and then we start building these proposals. You know, if you have a business owner or an individual that's looking to save more, we'll build a proposal that's branded to your firm. We'll get together and we'll go over the proposal with you. And ideally, you submit an application with us, and we'll process the application with the company, and then hopefully you get paid. So anyways, we'll be following up with everybody at the conclusion of this. My contact information is right here. Feel free to reach out, shoot me an email. That QR code should lead to a booking on my calendar if you scan it. But I will, we're right at 15 minutes and I'll sit here for a minute and see what questions roll in and be happy to take those and answer them. All right, great. Well, thanks everybody for joining. This is a really dynamic plan that can work for many people out there. And we'll be catching up with everybody to answer any additional questions. I just got a question in. Is the policy owned by the business? Generally, no. It could be. It could be if in the case of a business owner, but it doesn't have to be. I would say generally it is not. That's probably the best way to do it. By the way, we have a specific process to keep track of these and to address these things and be able to make sure that the loans come out. Fantastic. Well, again, we'll be following up with everybody. And feel free to shoot me an email if you have any immediate questions, and we can go from there. Thanks, everyone. Uh, Got a question. Do we use whole life or IUL? Generally, just the nature of whole life does not allow for the flexibility and does not have the loan features that are as attractive as an index policy. So generally, we'll use a index policy. In fact, I wouldn't recommend doing something like this in a whole life because it probably won't work out as well. Fantastic. Well, thanks everybody, and we'll be following up soon and go from there.